all of Americans with business and market analyst Seth Denson and accounting professor at Montclair State University, Dan Geltrude. Gentlemen, good to see you both. Seth, to you first. Markets have been all over the place. It's been a big roller coaster in the wake of the banking crisis. What does it mean for investors overall?
Well, apparently not much, Tom, because if you look at the way that markets finished this week, they were all up. The horrible week. We spent all week talking about the crisis of what's going on in the economy and everything. And what happens? The markets are up. The NASDAQ, which you could say foundationally was a core issue of this problem, the tech-founded or tech-based NASDAQ, up 5% on the week. So what is the story here? Government bailouts. I don't care. You can call it whatever you want. It's a bailout. The government's got your back. They're not going to let the markets fail. So I guess you can rest easy until money doesn't matter anymore.
And I guess it doesn't, honestly. Dan, 11 financial institutions swooped in to save First Republic Bank, contributing $30 billion to keep it afloat. The president says none of this is going to cost anybody anything, and the banking system is just fine. But a lot of people out there, Dan, and a lot of small businesses are nervous. How concerned should Americans be, and what can and should they do to protect themselves?
Well, when you talk about being concerned, as people should be, there's 2 points here. Concerned as an investor in a bank and concerned as a customer of the bank. So when you're talking about investing in these banks, well, like investing in anything, Tom, you're taking risk. And, could this situation spread to other banks? It absolutely could. So, yes, as an investor, keep your eyes wide open. At the same time, as a bank customer, as long as you have properly allocated your funds and you're staying below that $250,000 amount for the FDIC insurance, and that it's an insured bank, then you're okay. So again, everybody needs to be aware of what's happening with these banks.
Seth, is there anything that you should be talking to your financial planner about when it comes to any kind of market moves that we're seeing here?
Yeah, the key question, Tom, is always the time horizon, right? What is the time I need to be able to access money? When would I need money if I needed it, and how much? These are the key things to think about your daily life and whatever your investments could, however they could impact it. For example, a lot of what the cause of this was locking up money in long-term bonds. So be talking to your long-term or your financial investor about how long-term am I locked up on money if I were need to access it. These are key things. Dan makes a great point. Stay diversified, but the other thing is make sure you're working with a financial planner that is a fiduciary of yours. That's essential.
Okay. Dan, during her hearing on Tuesday, Treasury Secretary Janet Yellen admitted to a GOP senator that raising interest rates due to inflation were part of the problem that led to this current situation. Take a listen to this.
My understanding is that the bank, to meet liquidity needs, had to sell assets that it expected to hold to maturity. And given the interest rate increases that have occurred since those assets, including treasuries and government-backed mortgage-backed securities, they had lost market value.
Do you think, Dan, that this is going to influence the Fed's decision-making going forward?
Well, I don't often agree with Janet Yellen, but in this particular case, she's right. There's no question about the fact that the interest rate situation was a contributing factor. And Tom, the banking industry is so regulated. We have to wonder how this happened. You have internal auditors, external auditors, state regulators, federal regulators, all looking at this financial information and saw the exposure that these banks had, interest rate exposure. And nobody said, wait a minute, we have a problem?
Yeah.
That's an issue.
Yeah, and I think that does go back to Seth's point at the beginning of this, and that is, well, does the money mean anything, and does the risk mean anything if you're just going to get some sort of a bailout from the government? Seth Denson, Dan Geltrude, thank you both for breaking that down for us. Appreciate you.
Thanks, Tom.
Thanks, Tom.
And before we go